Welcome back to Virginia This Morning, live right here on CBS 6. A recent bank rate survey found 42% of consumers with credit card debt added to the amount they owe since the global pandemic began last year. A certified financial planner and great friend of the show, Daniel Hill, joins us live by Zoom, ready to talk about how you can pay down your outstanding balances. Daniel, great to see you.
Good morning, Jessica. How are you?
I'm doing well. You know, this is a topic of conversation for so many of us, and it seems like, okay, well, we'll work on paying down this amount that we owe. But sometimes that can seem a little insurmountable, can it?
It definitely can be. And I find that sometimes folks are a little bit embarrassed to even talk about it. I've had clients of mine that have been clients for years and finally, got up enough courage to come in and say, hey, I need your help with this. So it is an issue. It just kind of happens, in like life. And then we turn around and we've got this problem.
So, Daniel, it seems like the first step might be to start having the conversation, recognize that it might be time to focus on this. And then what's the first tip that you have in terms of getting your arms around it and maybe getting it back under control?
So I think one of the first things as far as getting it under control, and what I did in this instance that I just referred to this one client was take advantage of the no interest offers. If you're like me and everybody I've talked to, I'm sure that almost on a daily basis, you get an offer in the mail for a credit card. Most all the time it has a zero interest for 12 or 18 months. And in this particular case with that client, that's what we did. We just kept applied for a couple zero interest credit cards, transferred those balances over, and within almost 18 to 24 months, she had paid it all off because the interest is just kind of insurmountable, if you look at it on there, it'll say like if you make your minimum payment, you'll pay this off in 27 years. And I don't know if I'll be around in 27 years.
Well, we certainly hope you will, Dan, but with the idea of moving these things around and taking advantage of no interest, you're capitalizing on essentially having that money for free. But the key is you've got to pay it back, pay it down, and pay it on time.
Right. So great point. That's the second most. So I would advise people to put it on auto pay. Okay. One way to kind of be sure that you're not late is to put it on auto pay. And that's what I do with almost all my bills. I always tell people I'm kind of old school. So I was writing checks, up till a couple of years ago. And then finally I, got up to the modern times and have everything on auto pay. So put your credit cards on auto pay, have them paid off, come out before a day or two before they're due. And you'll avoid, because that's one of the biggest things that can ding your credit score is late payments.
So with carrying this credit card debt, you've suggested moving it around, certainly pay it on time. The auto pay is a great feature. What else should we be doing to really wrap our arms around this? And we've talked a little bit about then making our way into either repairing or establishing a better credit rating.
Yeah, so there's a couple ways you can do that. I would say one of the ways, first, not to get in so much trouble is don't have too many cards. Like I said, you get offers every day, and most people will give them to you, and try to avoid that. You don't really need 6, 8, 10 credit cards. You should only need a couple, 2 or 3. And then if you have some older credit cards, one way to boost your credit score up is to use that older card because it has a long track record, so to speak. And maybe buy a tank of gas with it, or when you go in the store to get a soda and some chips or whatever, use that card, but then pay it off. And that can boost your credit score up significantly.
This is one of those things we've heard a little bit about, Daniel, where you've established a credit card, this credit line with a company. And so maybe you've paid that one down, but you don't want to close it because that history is what boosts your credit score.
Exactly. So, yeah, you want to keep those old credit cards. You want to keep them active, and keep them under control. But then on the other hand there, Jessica, what you're talking about is don't open up new ones. So, because if you have too much credit, they look at that too. Because like I said, they're going to send these things to you. They're going to give you the credit. And then people are going to look at it and say, oh, wow, you've got this big credit. You could use it, and that could cause problems. So sometimes when you go to refinance your house, they look at that and they'll go, wait, you have too much credit. So that can be detrimental.
Absolutely. All that comes into play when you were talking about that credit rating. We want to get that boosted so that you ultimately get better rates on loans. But if you have too much credit out there on the credit cards, that can undermine this rating that you're working so hard to build. I want to get this straight, though, Dan. You've suggested, of course, taking advantage of some lines of credit maybe that don't have an interest, 0% interest on them. So if we open those, we don't close the other accounts. We just keep them minimally active.
Yeah, typically you want to transfer that whole balance over so that you'll have a zero balance on it. And then, yes, keep it active. Depending, like I said, don't go overboard with how much credit you have out there.
Some good insights. Daniel Hill, we appreciate talking with you. Thank you so much.
Thank you, Jessica, for having me. I appreciate it.
Absolutely. We'll share a little information on more services that Daniel Hill provides. We'll have a link on our website later today, WTVR.com/VTM.